Hello everybody, here's my new rant. Well, markets are driven by money supply. If there's not enough money to go around, markets don't go up because you can't buy stocks if you don't have any money. Now, when money's printed, it goes into the system and people like banks and people like trading companies get hold of that money and it goes into assets and prices go up. So what you have in the current system is money's printed, it goes into cash flow, into supply, it goes to the sort of people that buy assets with it. So real estate goes up, stocks go up, and it's not as powerful an inflation creator as it would be if, for example, you handed that money out in stimmy checks. So that's the way that QE has worked for many, many years now, and we've been in a period of QT in America. And also elsewhere, but America's the one to watch because that's the 800-pound gorilla. Now, when COVID kicked off, the Fed and all the central banks pumped vast sums of money into the system to keep the whole system going, paper over that huge chasm of people not doing any work and basically being put on leave for months and months upon end. And that money, in the end, created inflation. And the central banks have been pulling out the excess money from the system using QT as the way to drain it out. Now, in America, the excess money that came in from QE ended up in something called the reverse repo. Now, that is a system that the Federal Reserve uses. It says to banks, hey, that money I kind of handed out, if you put it back in this account, we'll pay you interest on that. So, if we're going to pay you 3 or 4% on that, you're not going to lend it at 5 or 6 or 7% to some dodgy people that may never pay it back or may go and spend it and create inflation. So put it in our reverse repo. And the banks go, yeah, sure. I'm absolutely guaranteed with my money. It's safe as houses. It's free money. Thank you very much. You could see how much free money there was in the system by looking at the reverse repo. Now, they've been draining that money out because they've been lowering their balance sheet. So by lowering their balance sheet, I think someone agrees. That, by the way, is thunder. Looks like it's going to be a huge storm. Anyway, the powers that be are obviously listening. So the Fed lowers its balance sheet, and that drains money out of the system, and that drains excess money out of the system, which drains money out of the reverse repo. And here it is in chart form. You can see all the excess money has been drained out and is now gone. But what's actually happened is it's gone negative. So there's now not enough money in the system. And there's another system called the Standing Repo Facility, which enables the banks to go, I need money, and get it immediately from this big bucket of money. And that was invented for the banking crisis last year, when Silicon Valley Bank got into trouble and all the other local banks got into trouble, and they made this big bucket of cash facility so that all those banks could dip in and make sure that there's no shortage of money and that all the different banks don't pull their drawbridges up and the whole system seizes up. So that facility was created for a situation where there's no excess money and then suddenly there's not enough money to go around because something kicked off that was unexpected. Well, right now, the SRF is being used. It actually has been drawn upon over the last few weeks, couple of 3 weeks. Now, this is a chart of the Fed's kind of emergency operations to inject money into the system. And here it is. So that's a pretty scary chart. Oh, look at that injection during COVID. Yeah, you could see why they'd need it. Oh, why has it started again? When the Fed is injecting liquidity, i.e. cash, into the system to keep it running, there's a problem. And that problem, of course, is the government shutdown. And the Treasury is allegedly meant to hoard cash when that goes on. So they've been effectively draining money out of the system. People haven't been getting paid. All sorts of money that should be coming into the system hasn't been coming into the system. So that has intersected with there not being enough money or a surplus of money in the system to take the strain. That has led, I believe, to what is going on in the markets, which is increased volatility, increased ranges, one day up like a rocket, next minute down like a rock. And that's because the money supply has been disrupted by the US government shutdown and this position of there not being quite enough money in the system, or the system being in a state where the actual regulators aren't sure whether there's enough or there isn't enough. And of course, they're being told by the market itself there's not enough, and therefore they're injecting cash into the system. Well, that's a pretty volatile and certainly disruptive situation. And you're seeing that as a disruption in the equity markets and in the crypto markets and in the halt of the rise of gold and silver, for example. And it's all come about, in my book, because the money supply has been disrupted. Now, that means there's a call. Option one, are the wheels coming off? Are they going to muck it all up? And are we going to have a cash flow disruption period and therefore a crash? Or is the Fed going to sort it all out and it'll all be fine in a few days' time? Now, I think it's the latter, because you're not seeing any headlines about this stuff, are you? You're not seeing people jumping up and down saying, oh, the Fed's having to inject money. Oh my God. No, because they're just getting on with it and getting it done. So they're avoiding a crash. They're avoiding a financial disaster, emergency, or whatever you want to call it, because they're actually on it. And they have already been effectively bailing out the system, or you might say regulating it, from actually having a disruption, having a emergency event. So all you're getting is a wobble in the market rather than, a 10% move. And, in a way that's reassuring, in the same way as looking at that chart isn't. Yeah. So right now, over the last few days, last couple of weeks, there has been emergency injections of liquidity into the market because there hasn't been enough money around to actually sustain the economic system. And the Fed's been working to keep the wheels on, and so far so good. And I think now that the government has reopened, it's only a matter of days before everything goes back to normality. There you go. Tight squeeze as far as money goes, tight shave as far as the markets go. But I think in a few days, at the most a couple of weeks, we'll be back to normal. Anyway, thanks very much for watching. There'll be another rant soon, a couple of days or so, and I'll see you then. Bye now.